This is one of those how would I trade this video to do with pitchforks and a few other bits and pieces. I never do BHP. Never traded a single share in BHP, but in this particular case we're going to do BHP for something to do. Start off with my usual pitchfork, do a high-low high. It's not very good. Yeah, you can see the usual sort of thing. Price ran down this channel. Sorry about the bars flashing on and off. It's just one of the things that happens with this particular package. So we're doing that. How would you trade this sort of thing? Well, I hate trading from the median line. I always like trading from the outside to the inside. I look at this as a framework. Basically, if price comes up and tests the out of time, it doesn't break it that often. Mostly it comes away. You can see in this particular case it broke it here, and that's what, 1, 2, 3, and it broke on the 4th attempt. So basically there would have been an entry somewhere about here. If it was me, I wouldn't have got the entry because I always put the entry right on the line. It's just one of those things. For me, I would have had my entry somewhere there, so I wouldn't have been taken out. That's where I would have had my stop, actually probably slightly higher than there. So my stop would have been, I don't know how high that is actually. It's one of those things on this particular package you can't tell. So it'd probably be about 46.60, and that would be about 46.10 or something like that. So it's about 50 cents. The potential is to come down here. So that's what, 44.5, 43.5. So it's like $2.50 compared to 50 cents. So it's about 5 to 1. As you can see, I wouldn't have got filled. Price would have come down here, come back up here, and I would have got filled on this one, because by that time I would have moved the entry position down to here. My stop still would have been up here, because there's no way in the world, if that test was unsuccessful, that I would have moved my stop down to that position. So we'll assume that I got filled here. Okay, price drops, price drops, price drops. Logically, that would have been a point that would have been tested. I certainly would have moved my stop down to here at some stage, behind this bit of market structure here. I don't know whether I would have moved it lower than that. Came down here, went up there. When it came off there, I certainly would have moved it down to that point. Came down here, $1.50. There's no way in the world I would have allowed it to go $1.50. I would have had it somewhere about the top of that stop, the top of that gap. I would have been stopped out on the next day. If I decided to defend it here, that would have been my entry, that would have been my stop. So I would have been taken out the very next day, if that's how it was going to go. I mean, that's a very strong move. As soon as I got past here, I would have been in heavy doubt. Maybe I would have taken it out on the close, but more than likely I would have just got stopped out the next morning. As soon as you get stopped out like that, you've got to draw another pitchfork. And I probably would have had to go at this one first, and as soon as I was stopped out, as soon as I was stopped out there, this pitchfork's obviously no good. So I would have been using this pitchfork, which brings price in. Now, it brings price in, but it's sort of got a few penetrations. I don't go long very often. Sometimes I do, but not very often. I prefer to play short for some reason or other. I just like selling things. This one, I don't short upward sloping lines. It's just not profitable. So maybe very maybe, when this occurred here, I'll have to use this bar. What you're looking at is a low here. You get down to this point, the low hasn't been taken out. You get to this point, and prices started to take out significant lows. So that's around about the point where you start to think about it. So at that stage, I'll just change some colors here. At that stage, I would have been getting out another pitchfork, taking the low, and saying that's the probable path of price. Now, that's the one that gave me all the confidence that the lows are starting to be taken out. So I would have probably had my entry somewhere about there, and I wouldn't have actually got a fill. But as you can see, price came down here. I would have been following it down, following it down, following it down, and at the time that it comes up here, I probably would have got my fill there, and it would have come down there, but then I would have got stopped back out. If I was getting my fill here, actually, would I have put an entry in there? Because I'll just move that there, and then we'll stretch this back into the middle a bit, and we'll have a look at it. If I'm going to back that line there, or to succeed and get my entry there, let's have a look at where I would have had to have put my stop, because my entry would have actually been there. The only places that I can put a stop are there, because of this little rounded top here, little double top, and here, which is my previous high in the ladder of falling highs, or falling tops. So I would have probably said I'd have to be there. Now that's a huge gap there, so I probably wouldn't have actually gone for the entry, because the whole point of using stops is to limit your risk, limit your liability. If you've got a huge gap like that to the first piece of structure where you can put your stop, your position size is going to be very small. And that gap there, it's what, 46.50, and that'll be about 47.40. So, like, I don't think I would have taken that at all. That's a 90 cent stop. 20, 30, 40, 50, that's halfway reasonable, but like, that's a lot of money to go up there. I mean, fine, if I had to put my stop up there, I wouldn't have got blown away. If I had to put my stop down here and used a tight ass stop, yeah, I would have got blown away. But like a stop that's only halfway up, you wouldn't really use it. You want to use a significant piece of structure to hide your stop behind. Okay, we'll go and have a look at something else. Yeah, this is AWE. Most people know I've been trading this one for a while. Okay, I've already got a pitchfork in here. What it did, there's a double bottom there, and there's a triple bottom. There's actually 4 bottoms on this thing, but anyhow, that's the way I've drawn the pitchfork. I drew it a while ago. You can see the testing of the curves on this part of the support time. I actually had it back here, but like that would have been a fairly obvious entry. I mean, it's banging away on there and it's not going through. As soon as it lifts off, that's when you really should buy it. Now, I didn't know it was going to spike like this, but I didn't have the chance to trade it, and I thought, oh well, I'll sell it a couple of days because it'll at least double bang, but it didn't. It just collapsed the next day, came down. You can see where it broke across the median line. Then we had a series of little supports. We came down, we supported exactly on the support time. It went up, it wiggled around a bit, just tested the median line, came back down, tested support again, broke down below it, and I was about to sell it just here. And I did the fork on it, and the fork didn't make sense. So I was lucky, it broke back up, it went to $1.87. And about here there is a line that comes down, a longer term line that comes down here, So I sold it at $1.87. Well, most of it, I kept about a quarter of it, something like that. Anyhow, it's broken down. So what we do is we get the fork, and I suppose that's the way we do it. I'll just move things around that way. Now that's what I'd use. I've got this bit hanging out here that, like, really would I have drawn it immediately, or would I have gone there and said, okay, that's a false break up. We've got this line coming down here to the median line. That's almost on a parallel. I reckon we would have stuck with this one, and that we use the rule of symmetry on this one, where basically you just put a couple of lines outside of it, and it's breaking out the same bit below as this bit above. It's about 110, 115%, something like that. I imagine that when it goes back up, it's going to test up here. But if we were to put a fork on it, well, hang on, I'll change this one to blue. Wish they had an all button on this thing. Okay, grab another fork, flow. Now we have to use this one, and we use the second of those because they're equal. That's saying it's going to come up and test at this median line. Now remember I mentioned the convergences before? They're going to try and break it up through there for sure and go back up here. Somebody's going to try and do it. It's almost dead set certainty, because there's another long-term line that comes through here. That actually, the long-term line rising comes through here about $1.59, $1.60. So this actually lifted a little bit early, which is a sort of a sign of strength. So I reckon it's actually going to go through here. Of course, I could be wrong. If I see it hit up against that line and stop, I'll be bailing out as quick as anybody. It doesn't owe me anything. So, like, I think on the last bit that I've got left, I might be, it'd be about square. Might be losing $100. Once you take all brokerage and everything into account. But, like, that's the test for me. If it doesn't break through here, I'll be taking a very dim view of it. In fact, what I'll probably do is I'll probably keep what I've got and just short it with a CFD. Put, what, 1,000 more or 2,000 more on a CFD and just leave it sit there short. And if I lose money on the equity, it'll just go into the CFD account with a bit of profit. And when the CFD gets stopped out, the equity can look after itself for a while. Well, I'll probably draw a chart as well. But the idea is, like, I don't short against upward sloping lines, and I don't sell against them either unless I get the double tap. In this particular case, I was wrong. I also don't like to trade off the median line. I like to trade here. Like, that was a dead set long for me. This is a dead set long for me. When it tests, although that break probably would have made me a bit nervous. This break definitely would have made me a bit nervous. Anyhow, they're the trading signals that I can see on these particular charts, and there's not much time left on that video, so that'll do for now.